Welcome back. Well, the call this morning was the bulls are going to face the test, and the lows of the day could be a good risk-reward entry. And that's precisely what's played out. The Nifty is up close to under 150 points odd. On days like this, when you have an SGX Nifty that's suggesting a downtick of 300 points odd, and when that happens, it's actually providing a good entry level. So for the first half hour or so, the bulls will be feeling good, but recovery from here on is going to be crucial. And that's why our call this morning was risk-reward will favor the bulls. The bulls will be facing a test today. So let's see how that goes. But let's move on. Travel and tourism is picking up in a big way. The festive season around the corner. Let's speak to a key player in this space. Mr. Kavinder Singh, the MD and CEO at Mahindra Holidays, joins us. Hi, Mr. Singh. Always good to speak to you, sir. Give us a couple of details then. The street is saying that, check-ins have moved up, prices have moved up as well. But for your company, two key parameters. One is, if you could tell us what is the occupancy trend in Q2 so far, and also the member addition is something that the street tracks. So what has been the addition in Q2? And for the year, what kind of a target do you have?
All right. I think I would like to confirm that indeed the check-ins are increasing at a very, very fast pace. July month went off very well with about 81% occupancy. Normally, that's not the case in the month of July. August at about 78%. So we are roughly about 80% as of now for this quarter, and probably we will end around that in this quarter. If I look ahead in October and November and December, the business on books is about 85%. So the outlook seems good as far as the occupancies are concerned. And mind you, this is despite the fact that we added about 1,000 rooms in the last 3 years. And despite that, our occupancies are holding firm and steady. As far as the member additions go, our member additions have been looking good. We did well in Q1. The trend continues, so we are doing well as far as member additions are concerned. As you know, we have a portfolio of products, and all of them are doing extremely well as we speak right now. But I must hasten to add that, in this inflationary environment, we have a bit of an advantage because our members or prospective members are also looking at the fact that if they were to buy the membership today, they will not have to pay any increases on the room rentals because we don't charge any room rentals once you have bought this membership. So there is an upside there which our prospects are looking at, and that should fuel our member additions growth going forward.
Right. Could you tell us how many new members have you added in Q2 so far? 15 days to go for the end of the quarter.
So normally member additions is something that we do not bring it out in public domain till the quarter ends. You will definitely hear about them once our board meeting finishes in October. But as I said already, that the momentum is there. We are doing well. Our multi-product portfolio strategy has done well for us.
Which is the most profitable of the product categories? I mean, in the 3-year, 10-year segment, and where is the maximum momentum in terms of new members?
So the good part is that the 25-year product is doing extremely well, despite the fact that there is uncertainty in the environment, there is inflation, etc. The 3-year product is doing also very well, and the 10-year bliss, which is meant for seniors, is also doing very well. So there is a momentum in all the 3 products, and rightfully so, because the segments are well defined and we are targeting segments appropriately.
Okay. So in terms of inventory addition, what are we looking at now? Since, demand is picking up in a big way, now COVID is behind us. You had a target of 5,500 by FY25. Do you stick to that? And what are we looking at in the next 1 year or so?
I think we will do that target earlier than what we have mentioned, probably much earlier. So we are definitely looking at accelerating our inventory additions. As I told you that in the last 2 years, we added about 800 rooms, and we would like to maintain a similar run rate going ahead. And therefore, we would hit the 5,500 mark earlier than what we have projected. The good news is that we are at this point of time looking at acquisitions of resorts. There are due diligence process which is going on. And there is an opportunity to pick up some good resorts at this time. And also, we have started in right earnest the work on building our own inventory, whether it is at the Shimla Kandaghat area, where we have a 200-room addition going on our existing property. And we are also going to break ground in next few days in Ratnagiri area, Ganpati Phule area. That's where we will bring another 250-room project. Our Puducherry resort is also getting expanded by about 60 rooms. Our Goa Sonora resort is getting expanded by 40 rooms. And we have another few land banks where the process of design and development is going on. So we have a clear capex of about 1,000 to 1,200 crores ready, and we are ready to fire there as well.
You're already at around 4,600, so I think that 5,500 mark should definitely be there in FY24, just going by what you're saying itself, that 2025, I think that's too far ahead. But, give us a couple of details. You're talking about a couple of acquisitions as well. Some inorganic growth that is. Could we hear something about that, say, in the second half of this fiscal? Is that likely? And also on the member addition, you can't give a specific number for Q2. But the last couple of years were COVID hit. And you had added 12 to around 13,000 members. So this year should be far better, right? Should we look at a number of around 15,000?
Yeah, I think if you look at our Q1, that gives you a fair idea. We did about 3,800 odd number, 3,900 odd number. That should give you a good idea of the run rate. Q4 is even better. So, yeah, I mean, generally speaking, we are good on the member additions when we will definitely beat the last year numbers, which were, of course, COVID impacted. As far as the inventory is concerned, I tend to agree with you that we are definitely moving ahead at a faster pace. And as far as the acquisitions go, the acquisitions, there is a due diligence process that goes on, and these are property acquisitions. We are not doing any business acquisition here. So the idea here is to add inventory, both in India and abroad, which will be used by our, of course, members. And that's a process that we run almost on a regular basis, but it has accelerated. That's the only message I want to mention here, that there is an acceleration in that area as well. And also the PPP projects that we are doing with government are also looking good. We had mentioned that we have soft launched a very small boutique resort in Himachal with the Himachal government's initiative. This was a PPP project that we won. We have also won the Harihareshwar project in Maharashtra with Maharashtra Tourism Development Corporation. There are a few others. We are talking to a few other state governments, and you should hear about that also in some time.
Okay, well, all this talk about the Shimla resort and the Himachal resort, I must confess, is creating a lot of wanderlust. We're sitting here in our studios, right, planning our next holiday. But you said that you're close to acquiring a few resorts as well. The due diligence is underway. So what can we expect by the end of this year? And what would it take the total tally to?
Yeah, as I said very clearly, there are total target of about 350 to 400 odd room additions is intact. We will definitely deliver on that. I mean, if we end up doing few acquisitions, we could beat that number as well. But, the main thing here is that we are very confident. And that's the key part. I want to give you the message that we are very confident of filling in the rooms that we add. Because as you know, leisure is on a boom. Our brand is at its all-time high in terms of, because we recently launched a new campaign, where Ravina Tandon is actually trying to plan her holidays, and she finds Mahindra Holidays as the best bet there. And that campaign is doing extremely well as we speak right now. So there is a momentum for looking at our memberships. There's a momentum in terms of our resort income, because when the occupancies are good, the resort income is likely to be good. And that's what you saw in Q1 as well. So the good news is that the momentum continues.
The holiday club resorts, what's the status there? There was some talk that you may actually try to sell some of that as well.
So holiday club resorts actually, after 2 years of COVID, have, as you know, in Q1 have turned around. Q2 is generally a very good quarter for them because it's a seasonal quarter, people holiday. However, there is an issue of inflation there, which is rearing its ugly head in Finland as well as in Sweden and Grand Canaries. But I must say that as I look ahead, even in this quarter and ahead, the business is on a turnaround zone. And despite all the headwinds that we see, we are likely to see a good performance of Holiday Club Resorts, and that will reflect in our consolidated performance as well. And as far as the divestment is concerned, really no comments, because we believe that the business is good. It's something that can add value.
Are you
to
actively,
us.
Kavita, are you actively planning to? Are you looking to sell the entity? Or
no? I said that I clearly said no comment.
Okay.
I said that at this point of time, we believe that the business is doing well and it is to add value to us.
Got it. Thanks very much. Appreciate you joining in, and thank you for sharing that with us. Appreciate your time here, and good luck. As you said, overall things are looking pretty good. The market's down 170 now, so 17,898 is where we find ourselves at. So it's not a leg down, but, after a very sharp recovery, the market's given back about 20, 25, 30 points or so. IRB Infrastructure is the next company we're speaking with. August toll collection numbers have come in around 336 crores. This is a 35% year-on-year rise. But do remember, 2021 toll collections were suspended on account of farmer agitation. Tushar Kevadia, as CFO at IRB, is joining us right now to take some questions. Tushar, great to have you with us here. Thank you very much. Could you put into context the toll collection, the August toll collection numbers, and of course, I mean that base impact I referred to because there's some specific events last year, same time last year, and how are things looking now in September so far?
Sure. So as we have been sharing the numbers now every month, and it has been observed that the collections are improving month-on-month basis. So there's a robust growth in the toll collections, predominantly on account of tariff hike, achievements of CODs for a couple of projects, and then contribution by the traffic growth. So this 35% growth is led by with the traffic growth of almost 7 to 8% on the portfolio basis. We look forward that these numbers are continuing even for the September as well. And besides this monsoon season, the numbers are quite attractive. And looking to the festive season going forward, the numbers would be more better than what has been envisaged till today.
Okay, Tushar, good morning. So you're saying that these numbers are going to be sustainable. Can you tell us, there was talk of a tariff hike in the Mumbai-Pune Expressway. Is that confirmed?
So there was no tariff hike for Mumbai-Pune project for this period. It's totally that growth is on account of volume growth, which is approximately 10% for this project. So tariff hike is due in next year from 1st April 23.
Hi, Tushar, what will that be? You know, all of us are Mumbaites and we travel to Pune quite often. What could the quantum be? Is it already a pre-adjusted rate? Is it inflation-linked, a broad range?
No, so for Mumbai-Pune, we have a fixed tariff hike every 3 years, and which is 18% will be due from 1/4/23.
1/4/23. Okay.
So what would this mean totally in terms of what the organic growth would be in traffic momentum for you? Put together with the tariff hike and the toll collections, what are we looking at for the full year?
So on like-to-like comparison, considering all the adjustments for tariff, the volume growth what we have seen is around 7 to 8%, and we believe this continues for the coming quarters as well.
Okay, Tushar, we understand that board approval has come in for the transfer of VK1 Expressway project to the InvIT fund for a consideration of 1,300 crore rupees. Could you tell us what is the status? By when will that happen? And also post the GIC deal and fund infusion, what is the debt situation of the company, and how are you intending to reduce debt going forward?
Sure. So first of all, on the VK1 transfer, the unit holders of the public InvIT has recently approved the acquisition of the particular asset with 99.99% favorable vote. With this, now we are in the process of transferring this asset, which the process will be completed before the end of October 22. And this transaction will lead to equity consideration of 342 crores for IRB, and the debt of 945 will go off the balance sheet for 945 crores will go off the balance sheet for IRB. Post this, our net debt to equity will at a console level will come down to 102 billion, 102 billion post this transaction.
All right, Tushar, what about the EPC side of business? Could you give us what is the revenue guidance that you have for this year in terms of EPC revenue?
Yeah, so now we have all the 5 projects where we have achieved the financial closure. For this year, we are expecting the construction revenue around 45 billion for this year.
Okay, Tushar, we leave it at that. Thanks a lot for joining us and giving us an update on the business. The toll collections have improved and what's happening with the overall revenue picture as well. For the market, it's not bad at all. In fact, now the Nifty has recovered almost 200 points, so don't lose sight of that. It's back above 17,900. The low that we hit of the day was 17,770. Yes, we're petering off a little bit from the highs, but nevertheless, it is a recovery for sure. Let's take a quick break. We will ask Mitesh Thakkar for some technical advice on the other side.
Okay, welcome back. So we've got the market, which is down 156 points, and which means it's up 150 from the lows as well. So it's kind of hanging in between the day's range, I mean, from yesterday's close to today's low, right in the middle. Mitesh Thakkar is with us to run us through any technical trading ideas. Mitesh, first of all, any view on the Nifty? Will we see at some point one more leg down, or this is it? And the market kind of stays here and spends bulk of the day around these levels?
Prashant, I think, early in the morning, I talked about 17,870, as the possible support area. We did open below that, but we, quickly captured that area. I think as of now, I'm not looking at today's low being broken immediately. It can happen though, but I think, the chances and the odds and the probabilities are much on the lesser side. So I think I'll believe that the market might just amble around for maybe a 2-3 days kind of a period before we get a definitive kind of a signal. For the time being, I think on the upside, till this gap gets filled, I think, 18,025 to about 18,075 levels. Then I think you will see every rally around that level face a lot of supply. But on the downside, 17,800, 17,775 should come into play. So it could be a narrow consolidation, albeit a slightly choppy one. But that's the way market could be in the next 2-3 sessions.
Okay, what about individual stocks? I mean, this is giving you a good opportunity, right? Not just for intraday, but for a positional trade as well on the upside. What would you buy in this dip?
Good morning, Sonia. I think Z looks something, which is clearly in an uptrend and is trading mildly in the positive. It's just actually flat, but the overall structure is very good. So this can be bought with a stop below levels of 265 for targets of 285 to 90. And on the selling side is Voltas. That's a sell with a stop at about levels of 965 for targets of 920.
Okay, all right, Mitesh, thanks very much for that. So that's some trading ideas coming through. Mitesh basically saying that perhaps the markets ambles around, spends time for the next couple of days around these levels before finally giving a decisive move one way or the other. Let's shift focus to the commodity markets and what's making news there. Manisha is here with the one commodity she has on her mind today. Manisha, hi, morning.
Well, I'm looking at the zinc prices because among the base metals, this is an outperformer that we have seen for the last couple of weeks now. Zinc is trading at a 2-week highs right now, and this is after expectations of deeper output cuts in much of Europe, and shortages is what we are looking at, and the inventories have continued to decline as well. If you look at the output cuts, well, Nyrstar has shut the zinc smelter in Netherlands, and that has been shut since 1st of September. Trafigura also has cut up to nearly 50% of smelting capacity in at least 3 European smelters there. You already have seen output cuts by IRB smelter, this is in France, and then Glencore in Porto-West smelter as well. So the output cuts have been consistent and have seen deeper cuts coming in, especially from Europe. Apart from that, it also is concerns coming in from China, where they are imposing stringent power restrictions across country. So when you look at the zinc output from China as well, for the month of August, we have seen a decline of 2.8% on a month-on-month basis, and this is down by nearly 9% on an year-on-year basis also. Between January and September, Chinese output is estimated to have declined by 2.6%, and there is an interesting report from Citi which has upgraded zinc prices going forward. For the next 3 months, they have put out a target of around 3,200, and for 6 to 12 months, they're expecting the zinc prices to continue to gain up to an average of $3,400 per ton. So good going, especially in this one metal.
Thanks a lot for that, Manisha. Well, let's hop across to Bahista. She's joining to tell us about Siemens Innovation Day 2022 key takeaways. Bahista, take it away.
Well, Siemens has already completed 175 years globally and 155 years in India, and they held their Innovation Day 2022 yesterday, where the management had discussed the power that digitalization brings for the company and what importance it holds for the country as a whole. The company has also launched an open digital business platform, which is called Siemens Accelerator. And there was also a Siemens Accelerator Cube for the viewers present at the event. Then the discussion moved towards the energy landscape and the decarbonization, where green energy is going to be even more critical for a country like India, and how Siemens plans to participate in this transformation. The management had also highlighted the entire landscape of supply chain, how it's changing over the years, and how Siemens faces challenges in trying to strike a balance between profitability and sustainability in its operations. Additionally, the company strongly believes that digitalization has to be a top-down approach in every organization, as employees are usually the ones that face the highest amount of hindrance in accepting newer tech. Also, training and reskilling the factory workers on newer technologies is one of the major challenges that they pointed out. There was also an exhibit zone which brought to light the real use cases and the products, how they benefited for their customers.
Okay. All right, Faiza. Thanks for that. Well, let's hop across to Nimish. He's standing by to tell us the standard brokerage report that he's read up. Nimish.
Hi, Nigel. So, the entire IT basket is under pressure today for two reasons. One, the Nasdaq last night was down more than 5%. And today, Goldman Sachs has gone ahead and downgraded the top Indian IT names to sell. Now, they believe that the valuations are still very high and not factoring in the down cycle ahead. So, they've downgraded TCS, Infosys, and Tech Mahindra today to sell, and they've marginally upgraded Wipro to buy. Now, the key reason is they believe the dollar revenue growth will start to materially slow down from here. So, for calendar year FY24, Goldman Sachs has downgraded the forecast of the top 5 IT companies by 4 percentage points to 6% versus the earlier estimate of 10%. Amid all this, they believe that the P multiples are still very high. Now, coming to individual stock recommendations, on Infosys, they've downgraded the stock to a sell now with a target price of 12.24, which was earlier at 17.22. So, and they've also cut the EPS estimate between FY23 and FY26 by 6%. On TCS, they've downgraded the stock to a sell now with a target price of 22.61. The earlier target price was much higher at 36.78. Even in TCS, they've cut the FY23, FY26 EPS estimates by 5%. On Tech Mahindra, it's a downgrade to sell now from neutral, and there they've cut the target price to 686. The only stock where they've upgraded is Wipro within the IT names. And again, the Wipro upgrade is largely on attractive valuations. Even for Wipro, they've marginally cut the EPS estimates by 1 to 3% between FY23 and FY26. So they believe that the earnings slowdown has just started, and the valuations are still very expensive. So on back of that, a big downgrade on the top IT names from Goldman Sachs.
Okay, thanks a lot, Nimish, for that. By the way, playing as per the script, the market has seen a big buy on dips. The Bank Nifty is in fact now going to break into the green very soon, with big buying seen in names like SBI, IndusInd Bank, all up, ICICI Bank, all trending in the green right now. And a lot of auto stocks also in the green, Bajaj Auto, M&M, Maruti Suzuki, all up anywhere between 0.5 to 1%. Let's slip into a quick break. On the other side is our special segment, it's the economy. Kumar Rajgopalan of the Retailers Association of India and Nilesh.
Even a down day, India's outperformance shows in the stock markets. And one of the reasons is because it's a great domestic economy. Well, speaking of domestic economy, consumption an important indicator, and August retail sales become very important since it is the start of the festive month, with Ganesh Chaturthi starting the festive season. India's retail sales in August, that is last month, are indeed a good 17% higher than in August of 21, the previous year. And indeed, if you look only at Western India, retail sales are a good 24% higher than what they were a year ago. However, one can detect two worries from the data put out by the Retailers Association. One, sales of luxury items like, say, sports goods or jewelry and even footwear, for instance, have done much better than, say, groceries. And secondly, while August 22 sales are 17% higher compared to August 21, the August 22 sales are only 15% above their levels in 2019. That means the 15% growth has come over 3 years, indicating that the revenge shopping is not enough to make up for 2 lost years. But do I understand the numbers right? To get more nuances, we have with us the author of the report itself, Kumar Rajagopalan, the CEO at Retailers Association of India, the association which has put together these numbers, and Nilesh Gupta, director at Vijay Sales. Gentlemen, good morning and thank you very much for joining me. Kumar, let me start with you. Have I understood the numbers right? It's a great growth over last year, but sales are not making up for the lost 2 years.
Yeah, Lata. So we're normally comparing our data vis-a-vis 2019 because that's when the sales were normal. So the pre-pandemic is the better measure to look at rather than last year's number because there were always ups and downs in the last year. So that's the first part. So in terms of growth, we have grown 15% over last year, over the last pandemic time, which is 2019. That's much lesser than what was the normal growth. We were always growing about 20% above since April. So yeah, 15% is moderate growth. This is, of course, not peak of occasions and stuff like that. So we should be waiting for the numbers for September to come for us to have a conclusive understanding there. The other part
one
was
minute,
that,
Kumar, I just wanted to understand this. If a shopkeeper had done 100 rupees of sales in 2019, he is doing 115 rupees sales in 2022. Is that correct?
Yes, across all categories.
Across all categories. So yeah, that was my bit of a worry that, there is not that 100 in a normal time. It would have been 115 or 110 in 2020. And then would have gone on to probably 120 in the next year, that is 2021. And by 2023, we would have been at 130 at least, compared to 2019. But we are not, looks like, making up for lost time. I just wanted to know whether I understood it right. Nilesh Gupta, would that be right? We are doing better compared to last year, but the 3 lost years are not getting made up. Is that correct?
So in consumer durable, I think there's a slight variation.
Sure.
What we have seen is in the last 2 years, there's been a price rise of nearly 15%. And so we have seen the numbers may not have grown as much as we expected, but overall, from turnover perspective, definitely we are seeing growth of 20-25% upwards. And this I'm talking, basically I'm talking with relation to Vijay Sales, and we are mainly in the metro market or A towns, A cities.
Of course.
So I think that is where we feel the growth is happening. Now, looking at the August month, so Ganesh Chaturthi never is a very big sale month anymore for the last 4-5 years. But what we saw on August 15th was a phenomenal growth over even 2019 and even over last year. So looking at that, we are very bullish, at least in consumer durable, that we should be seeing a very good Diwali. September is not going to be a very key month to be observed for consumer durable because the Pitru Paksh starts is Pitru Paksh, and people still have a tendency of not to buy during these months, although it is not as strong as what it used to be earlier.
Okay, fair point. But Nilesh, if you can give us a little more color in terms of, you said that the turnover looks big also because prices have risen. If you only looked at volumes also, you are feeling as bullish that volumes, number of, say, televisions, laptops, other electronic goods, washing machines, are they also in number-wise selling much better than 3 years ago?
So what is happening is, if you see even the trend prior to 2019 in consumer durable, our growth was always in single digits in terms of numbers. For the simple reason is now as the years are progressing, the base is increasing.
Sure.
So we have never had a double-digit number growth in the last 4-5 years. It's always been single-digit number growth, and I think that is continuing. But what is most important in consumer durable now, what we see is post-pandemic, is that people are looking out for higher capacities and better models. They are, especially in the metros, we are seeing a phenomena where people are not averse to buying premium and super premium products, which was not that big a case earlier. Earlier, prior to pandemic, the segment who used to buy premium products was very niche. Now that niche has come down, and that's, I think, is music for our industry. And even brands, if you see, they are also now started pushing more. They are less keen on the entry-level opening price points and more keen on mid and premium segments.
Okay. But would you not worry, Nilesh, that not enough entry-level buyers and more premium buyers would also mean that the rich have money, but not the emerging class.
Yet in our industry, there's one more variance which is there, is then that the big change is the EMI.
Okay.
So our 80% of the sales happens on EMI. And in EMI also, you have all the brands who are pushing in for zero down payment and a long tenor.
Okay.
Like a mobile company just announced paper finance of zero down payment, zero processing, and a 24 months tenor.
Okay.
Now, what this does is the people who are looking out for an opening price point have also moved on to an expensive product because they say, well, we are not paying anything, and in 24 months I can afford it.
Fair
and that's what's changing the face of our industry.
Okay, fair point. Kumar, now I want your thoughts. You have the entire segment. Nilesh talks only largely about consumer electronics, but you're looking at the entire universe. Can the worry be that luxury products or products which cater to the upper middle class is doing better than those at the bottom of the pyramid?
So till the month of July, we had seen that buying was happening across all price points. Okay. And that was very encouraging. I wouldn't call it revenge buying, I'd call it a cheer buying. But the fact is that people were buying for various occasions and buying was happening across. But there was always this worry of inflation. In the month of August, we've seen that the sales for the lower price point, the entry price point across categories, be it garments, footwear, like what Nilesh said about electronics, I think everywhere there has been a pause. I'd like to think it's a pause because if the indications from what's happening in Kolkata and the eastern region, because that's where the real start of the season is witnessed. Okay. We're already seeing that the east of the country has grown some 20%. There is not as much murmur about the entry price point from that region as it is in the rest of the country. Okay. So I think that customers have taken a pause. Definitely inflation is impacting the people who can't afford it and they are thinking whether they should buy. And various schemes like financing, etc. would help. But that would help when they want to buy for occasions. So I think we'll have to wait and watch.
Yeah, Kumar, 1 minute. What you're saying is that up until June or July, you saw all price points finding demand. But in August, Correct. The lower price points are not seeing as much as they saw in the previous months.
Correct.
That's a fair point. Okay. And region-wise, you said East. But actually, from the data you gave me, East has done only 16%. But West is a good 24% year-on-year higher. Does it indicate that only Western India is doing well, or all others are like running at half the pace that West is running?
Like Lata, I said, for us, the comparison is really again 2019.
Okay.
Because that's where we really get the indication.
Over there, East is doing well.
That, okay. Yeah. So because the COVID times, there were some regions which did well some months, did not do well some months, depending upon where the wave was, what the circumstances were, which was allowed to be open, what stores were not allowed to be open. So all those kinds of things were there. So if you look at it, East, now 19% over 2019, which is the start point that we spoke about, right? So that's already showing some indication. Now, as we speak, there are indications that East is doing well, even as I speak to various of our members. So we'll have to wait and watch.
And that's more modestly positive from what you're saying, optimistic.
Yes.
Kumar, would you all have any data in terms of Tier 1, Tier 2, Tier 3, Tier 4? Is the hinterland doing as well as the metros?
Not immediately. Many of our members do operate mostly in the metros. So at least the Tier 1, Tier 2, the Tier 3, Tier 4 data is not as significant yet for us in terms of the numbers. So I can't really comment on it currently.
Okay. Well,
anecdotally, though,
please.
When it comes to people who are doing food, garments, especially the value segment, and also some in the slightly higher end segment, they've all been saying that the Tier 3, Tier 4 markets are doing exceptionally well for them. So this is what we're hearing from various people. Okay. We'll have to wait and watch.
And your data covers even products bought over e-commerce?
That is for those who are on omni-channel, yes.
Okay. Yeah, so they would be reporting both their brick and mortar and their...
Because they talk about full sales.
Fair enough. Nilesh, exactly that question to you. I don't know how much you are selling in non-metro, but is there something like, heart of the city, much better sales, and as you go towards the tail, maybe, to Dombivli or Karjat, I don't know if you have shops over there, the extent of sales is less?
No, so if you are asking specific regions within the Mumbai city or within the cities, I'll tell you something surprising. The suburbs are showing a much higher growth than the heart of the city.
Okay.
Because I think the action is happening there because once the prices, real estate prices went up in the town, so all the people have moved into suburbs.
Okay.
So we are seeing a very good traction in the suburbs than in the city.
And you are outside Mumbai also. So is there anything?
We are outside Mumbai.
And is the sales there as good?
So across wherever we have seen quite a good sale. And see, there's also a reason for this because during COVID, people have realized one thing. Okay, there are only two important things in their lives. One is their family,
okay,
and the second is consumer durables,
okay,
and their mobile and laptops.
All right. So you are seeing a great deal of sales over there. Very good. Thank you very much. It's a cheerful start to the festive season from the data that Kumar Rajgopal has put out and Nilesh is endorsing. It looks like consumption is very good. There may be pockets of worry, but there is optimism all round. With that, we wrap up on Bazaar. Chartbusters up next.